I always like the analogy of being like the tickets to Carnival rides. You know, you can't use fiat currency to go on rides. You need to have the tickets. In this case, the tickets are tokens and the rides are all the applications that are being built on the protocol. So as we see more developers coming onto Base, and Base has been attracting a huge number of developers, an amazing amount of activity, actually, then we will see a transition to using the Base token as a means of monetization.
While crypto prices have pulled back, big structural shifts are happening beneath the surface when it comes to regulation, institutional adoption, and new strategies. For more on where the real opportunities and risks lie, we're joined by Managing Director and FinTech and Digital Assets Senior Equity Research Analyst at Benchmark-StoneX, Mark Palmer. Hey, Mark.
Hey, Jennifer. How are you?
I'm doing great, thanks. How are you doing?
Hanging in there in an interesting market.
It is an interesting market. We're here to talk all about Q4 earnings for crypto equities. Let's just start the conversation. What's standing out for you? You know, we got a bunch of those earnings reports. What's standing out for you when it comes to the equities you're watching?
Well, on the surface, it seemed like a very rough quarter for the crypto equity space, given the fact that we did see crypto equities decline as a group by about 20% during the quarter, in a backdrop where the crypto market cap dropped about 24%, Bitcoin a little bit less than that. But amidst that, we saw a tremendous amount of investment and a tremendous amount of building by those same companies that are continuing to expand beyond their core enterprises. A lot of that has to do with anticipation that in the near future we're going to see an influx of institutional capital into the space, with the potential enactment of the Clarity Act being the big catalyst that we're watching for there.
Well, the Clarity Act, a piece of legislation that has had a lot of stop and go moments over the last little while. Of course, the conversation around stablecoin yield is what's holding it up now. I just went through a few social posts from the weekend, of course, unpacking the geopolitical situation that's intensifying here. Do you think that this legislation still has priority when there are so many things that might be taking more priority from the folks who need to pass this?
Well, I think one of the things we've seen from Congress and the Senate in particular is that, they can solve for multiple functions at the same time. In this case, we're looking specifically at the Senate Financial Services Committee, trying to get through this question of what is the treatment of stablecoin yield going to be, the big dispute between the crypto space and the banks. That's not something that is going to take up a tremendous amount of Senate bandwidth once that question has been resolved. And that's happening behind the scenes, largely by staffers and lobbyists and what have you. So I think it's entirely feasible that we could see legislation continue to move forward, notwithstanding what's going on geopolitically.
Let's say it doesn't happen. What does that mean? You just said if this passes, we're going to see a lot of institutional capital flow into crypto markets. What if it doesn't pass? What happens? Well,
I think there are still pockets within the crypto ecosystem that are poised for explosive growth. I mean, if the Clarity Act doesn't pass, we still have the Genius Act, which related to stablecoins and was passed last June. We're seeing a tremendous amount of activity and investment around stablecoin payments, and at the same time around the tokenization of real-world assets and particularly financial instruments. So we're hearing more and more institutions that are saying they're going to be tokenizing their funds. They're going to be tokenizing real estate. All of these things would be helped by the Clarity Act to lift any remaining uncertainty as it pertains to the regulatory status of those entities. But at the same time, we are seeing the SEC bridge the gap to a certain degree by sending out no action letters and things of this nature. We actually have heard Paul Atkins at the SEC be very vocal about a number of different initiatives that they're taking on. He really is providing a bridge between where we are now and the potential enactment of Clarity, which is enabling things to continue to move forward.
We have about 2 minutes left. I know you're watching Coinbase, MicroStrategy, and Galaxy very closely. If you were to highlight something that stood out for you between those three companies in the last minute and a half of our interview, what would it be?
I think it's innovation more than anything else. I mean, what we're seeing is increased focus around the notion of taking a different direction or building something new. Just got back from the Strategy World conference in Las Vegas, where Michael Saylor made it clear that he was going to be focusing on the stretch perpetual preferred stock as the core of the company's fundraising activities. And the company continues to make tweaks around that. Again, it's part of the theme of innovation. Looking at Coinbase, they are not only diversifying rapidly, trying to get away from the ups and downs associated with crypto price cycles, but they're also leaning into Web3, particularly with their Base blockchain initiatives. I think if there's one aspect of the Coinbase story that deserves additional focus, it is Base. We haven't seen the company really monetize that, but it's sitting in the background as a source of tremendous value for shareholders once they decide to do so.
Make sense of that for our audience watching at home. Why does Base bring so much value to Coinbase?
Sure. Well, Base is its own protocol. It's a protocol the same way that Solana or Avalanche is a protocol, and it is built essentially alongside Coinbase. The next step will be a Base token. And, just as tokens function, I always like the analogy of being like the tickets to Carnival rides. You can't use fiat currency to go on rides. You need to have the tickets. In this case, the tickets are tokens and the rides are all the applications that are being built on the protocol. So as we see more developers coming onto Base, and Base has been attracting a huge number of developers, an amazing amount of activity, actually, then we will see a transition to using the Base token as a means of monetization. Coinbase will benefit from that ultimately. And so as much as there's no real contribution from a financial standpoint that's meaningful for Coinbase at this stage, it is out there and could represent an entirely new driver of upside for that stock.
Mark, thanks so much for joining me. It was a pleasure having you here in the studio.
Good to talk to you.
Right, that was the Managing Director and FinTech and Digital Asset Senior Equity Research Analyst at Benchmark-StoneX, Mark Palmer.